好，咁就多謝大家嚟臨我哋有一次香港數碼資產學會我哋嘅 online talk 啦。咁今次咧，我哋就好特別嘅，因為今次我哋係講關於 DeFi 同埋 Yield Farming。咁對於有對數碼資產有認識嘅朋友咧，陣間就可以真係留心去學習啦。咁但係我首先咧就想介紹下我哋個學會啦。我哋個學會咧最主要就做教育同埋我哋做啲推廣工作。咁教育咧，我哋嚟緊有一連串嘅講座嘅，除咗今日之外，咁包括下個禮拜一咧，同樣嘅時間，禮拜晏晝5至6，咁我哋就誠邀咗咧，就係香港學生事務處嘅主席。同埋呢個科大嘅即係嗰個嘅企業中心嗰個主管咧，就去分享下作為學生咧點樣去鋪排你自己嘅 career， 尤其是喺呢個數碼年代啦。咁我哋今日嘅 speaker 咧，佢都仲係一個學生嚟嘅，咁所以大家可以睇下作為一個學生可以點樣去鋪排啦。咁另外一啲實際嘅例子咧，就係一個僱主，我哋就請咗新世界集團嗰個嘅 CFO 咁嘅 Edward 咧，就會分享下一個僱主咧，其實佢哋係有啲對而家嘅年青人或者畢業生有啲咩要求，咁所以有志去入一啲大公司嘅朋友咧，亦都即係可以睇下啲僱主而家要求啲乜嘢嘅技能啦。咁另外我哋有個成功嘅例子咧，亦都係我哋HKDAS 個 co-founder， 咁Galen 咧佢就係 PwC 嘅 crypto team 咁另外佢自己都有自己嘅 set up 咗個 family office， 都係啲9位數字嘅 AUM 嘅，咁亦都係一個好好嘅成功例子。咁佢會分享下，作為一個佢都唔係讀 technical，即係唔係 science 嗰方面嘅人才啦嘅學生啦，讀書亦都唔係最 top 嗰啲嘅，以我所知啊。咁但係佢都可以即係入到 PwC 啦，亦都係成功即係 start 咗自己嘅一個 family office， 一個 VC fund。咁佢哋會分享。咁跟住12月咧，我哋就對於一啲對 digital asset 冇認識嘅人咧，我哋會有啲 training 就係教你關於即係乜嘢 digital asset 裏邊有啲乜嘢唔同嘅行業或者公司。咁另外我哋希望可以請到人咧，就講關於 smart contract 嘅，等大家學少少 technical 嘅技巧。咁另外我哋12月20號咧就會請喺呢個 digital asset 啦 blockchain行業裏邊一啲成功嘅 startup 咧，就分享下佢哋其實做咗啲乜嘢唔同嘅即係嘅 business model， 咁就等大家可以參考下呢個行業同我哋嘅生活有關嘅一啲嘅公司或者係一啲嘅即係一個 model 咁樣啦。咁跟住去到1月15、16號咧，我哋就有個 hackathon。咁就如果大家在座又係學生嘅話，或者你有啲朋友係一啲學生係希望令到增進自己嘅數碼嗰個能力嘅話咧，咁歡迎你參加我哋嚟緊1月15、16號嗰個嘅 hackathon， 喺數碼港同數碼港一齊搞嘅，佢係我哋嘅 partner 嘅組織啦。咁有興趣嘅朋友咧，就可以去3W HKDAS.org， 咁上邊咧就會有我哋嘅資料啦，亦都有我哋嘅 application form。咁如果對我哋嚟緊呢啲活動有興趣嘅朋友咧，咁就可以申請做我哋嘅 member。咁我哋 so far 嘅 membership 而家咧都仲係免費嘅，所以咧大家登記咗之後咧，就我哋而家嚟緊暫時每2個禮拜我哋都有個 online talk， 咁大家咧就可以即係每2個禮拜就學習到一啲即係新嘅知識啦。咁我哋亦都每個禮拜呢2個月啦喺明報有個專欄嘅，係啦，咁今日都有嘅，咁所以就亦都會向大家咧就係分享一啲最 latest 嘅資訊啦，係啦，咁所以我介紹就到呢一度，咁跟住落嚟咧，我哋就交俾我哋嘅一個年青嘅 committee member 阿 Leo 咧就啱啱今年先喺呢個 City 畢業嘅啫，咁佢讀 international business 嘅，咁所以亦都透過呢一個即係呢個行業裏邊，其實而家個 career 佢亦都日以繼夜咁樣啦。咁今日佢就會負責 host 呢一個嘅即係 online talk， 會介紹我哋 speaker 同埋陣間 Q&A 嘅環節，跟住臨尾佢會幫手用廣東話咧就 wrap up 翻今日個 speaker 同埋我哋 Q&A 裏邊一啲嘅精髓咁樣啦，等大家咧就容易啲去吸收嘅。咁我將跟住落嚟嘅時間交俾阿 Leo。
Okay, thank you, Fonia. So my name is Leo, part of the topic team. So I will be introducing today's presentation. So today's speaker is known for his work in crypto space. He has started doing crypto since 2017 and has cooperated with a lot of large-scale projects. So this man is now the founder and a managing partner of a crypto fund called Black Sierra and has a goal of exceptional yield with zero volatility. So he is also a very experienced research analyst in the Aashman Digital and researching green buildings design in university. So in today's presentation, he will be sharing about the DeFi landscape, the decentralized finance versus the traditional finance, disruption and the crypto career advice, and lastly, the investing in alpha. So known for its positive and motivational attitude towards crypto issues, the dynamic range of acquaintance and sense of adventure that no fear bounds, I would very honor to introduce Mr. Aashman Vyas. Please give him a round of applause. Thank you.
Okay, so thank you so much, Leo, for the introduction. So you guys can all see my screen and hear me okay? Everything's okay on the audio? Okay, so I've been told that my audience today, you guys are very diverse. So we have 18-year-old, like high school to university students, and also professionals with an institutional background. So in this talk, I aim to share something for everybody, for all levels. And so my goal is to give you a rundown of the crypto and DeFi landscape, share the outlook on DeFi versus traditional finance, what we refer to as TradFi. I'm going to talk about careers in crypto and share some investing alpha. So I plan to leave a lot of time for questions, so we can go through them at the end. So if you do have questions, please write them down. Yeah. So about me, currently I'm founder and managing partner of my own crypto fund called Black Sierra. I also dabble in strategic VC and angel investing. I also have another startup, which I started in university. It's a crypto and DeFi investment app in the Hong Kong Cyberport ecosystem. So I got into crypto back in 2017 when I was still in high school, during my last years of high school. And I was kind of drawn to these ideals of decentralization and transparency and democratization of basically just global financial systems. And that's the reason I started investing when, I was like just 18. Yeah, since then I went on to, get more and more like just deep into crypto. Through my, university education, I learned a lot about, algorithms and data science and ML and software development. And at some point I realized that, hey, I'm actually focusing more on this crypto thing than I am my degree, which is mechanical engineering. So that's around when I decided to, start a startup in the Cyberport system. And also around when I pooled some capital with a friend of mine and started the hedge fund, Black Sierra. So let me give you a brief intro to DeFi. I would think you are all somewhat familiar, so I'll just go over this kind of fast. So DeFi is essentially the building blocks of a global financial system built on the blockchain. And the attributes of DeFi are that it's decentralized, it's autonomous, meaning that it's not controlled by one entity and it doesn't have one single point of failure. It's democratized, meaning that anyone in the world with an internet connection can access DeFi services. And you see the recognition of DeFi by like a whole host of organizations around the world. So I'll give you some examples here. So the European Investment Bank actually issued and settled digital bonds on the Ethereum blockchain. So that is huge. That's a huge step for a sovereign entity to settle, bonds on a blockchain. And then even Fidelity, we saw one of the oldest institutional investment managers has opened, its services up to Bitcoin. Grayscale holds $30 billion in crypto AUM. They even launched a DeFi fund. And Thailand's oldest bank actually kind of marvels at the technological innovations going on in DeFi. And they launched their own DeFi fund to invest in up and coming DeFi projects. Even Goldman Sachs, recently filed for a DeFi ETF, giving people exposure to publicly listed companies that operate in the kind of decentralized space. So yeah, in summary, DeFi is just an autonomous, decentralized, and open and transparent financial system built on the blockchain. So I'd like to give you a rundown of kind of the crypto and DeFi landscape, like what the structure actually is. So obviously at the top, you have Bitcoin, which is kind of the narrative around Bitcoin is that it's a store of value, it's a hedge against inflation. But, you know, Bitcoin can't really do much apart from transacting value and acting basically like a digital gold. Bitcoin is quite lacking. So that's where Ethereum comes in. Now, Ethereum's main technology is smart contracts, which allow anyone to interact with these kind of automated apps on the blockchain 24/7. So Ethereum is the largest smart contract platform, and DeFi applications such as borrowing, lending, are usually built on smart contract platforms. So Ethereum is the largest one with over 300 protocols operating on the blockchain. Then we have Binance Smart Chain, then Solana, Avalanche, Terra, Tron, and the list goes on. So now I want to introduce the concept of a layer 1 versus a layer 2. So a layer 1 blockchain is kind of the base layer. So for example, Bitcoin is a layer 1, Ethereum is a layer 1. And if you have a global financial system built on layer 1 blockchains, you run into a lot of problems, which is kind of what we're seeing with Ethereum right now. So for a simple transaction, person A sending $10 to person B, the fees by the network to do so can be as high as $1,000 sometimes, 1,000 USD. So obviously for the initial goals of DeFi, to bank the unbanked, to create a global financial system, that's not very optimal. So now we have the introduction of layer 2 blockchains, which are kind of secondary blockchains, which run on top of the layer 1 blockchain to help with scalability and speed. So you have layer 2 blockchains like Polygon, like Arbitrum, and like Optimism, which run on top of Ethereum to kind of help DeFi be faster and more scalable. So crypto as an asset class has become huge, right? The market cap is over $3 trillion. DeFi is still, in comparison to that, it's kind of like a fledgling sector of crypto because the total value locked, meaning the amount of funds engaged in DeFi applications is, in comparison, relatively small still. So as a space, DeFi is still incredibly early. So the TVL of DeFi currently stands at over $265 billion, right? And in part, this has been due to more and more technological innovation, which has also been fueled by lots of venture capital investment by firms like, Double Peak. So this year, actually, venture capital funds made a record 17 billion investment into crypto, and only 2 billion of that was invested in DeFi. So even though that's small, the total amount raised in DeFi is still more than all the previous years combined. So what we've seen in DeFi is that it's still early, but the whole space has basically done like a 20x in value over the past year and a half. Right. So the DeFi landscape is huge. It's so sprawling. It's split up by so many different verticals, right? But the kind of main ones are stablecoins, lending and borrowing, decentralized exchanges, and derivatives. So this is quite analogous to the traditional financial system, TradFi, right? So for example, within something like lending and borrowing in DeFi, you're offered all these services like leverage and money markets and lots of yield instruments like bonds, etc. So a really important part of DeFi is actually the stablecoins, right? So the total value of stablecoins in the system is currently over $130 billion. So what we're seeing now is that all these different DeFi apps are giving way to use cases which will completely disrupt traditional finance in the next, 10 or maybe even 5 years. Because what happens with these things is that at first, the growth is quite slow, right? But then it's exponential. So it compounds really, really fast over time. And before you know it, we'll be seeing DeFi everywhere. So that's the kind of DeFi landscape right now. So these are terms I think only a few people understand, but I think it's important that after this presentation I can share these slides. These kind of sectors and verticals are extremely important for especially like professionals with an institutional background to understand, because now you have everything: asset management, derivatives, bonds, insurance, like even different currencies, different dollars, stable coins, yield instruments, even synthetic stocks, minted permissionless and decentralized on the blockchain. So it's kind of like a complete takeover of everything that traditional finance has to offer. So if you've seen that banks are actually quite scared of DeFi. That's really been the case with banks like HSBC, for example, even restricting crypto transactions to like exchanges. And in the UK especially, this has been quite prominent. So yeah, banks are scared because DeFi will take over. So now I want to talk about a more direct comparison to the traditional financial system, which is with decentralized stablecoins and fiat currency. So, as you all know, the US dollar is a type of fiat currency, meaning that it's controlled by one central entity and basically can be printed at will. So about 45% of all the US dollars in existence were basically printed last year. So, this has caused a ton of problems like increasing CPI, increasing inflation. The narrative we've kind of seen is that an increase in inflation and CPI has meant that investors now have accepted and adopted Bitcoin completely as a hedge against all the, kind of inflationary monetary activity that's going on in the world. So what stablecoins really have the potential to disrupt is payments tracking monetary flows in an economy, and the kind of individual liberty and freedom that people have to transact as they wish. So you'll hear a lot of companies, for example, Walmart, researching or kind of creating services for how people can pay with Bitcoin or Litecoin or Ethereum or any other coin. Like for example, Square, PayPal, everybody's kind of looking into Bitcoin and Lightning and how you can transact with that. But actually the technology to transact is already here. I can send a transaction, in USDC stablecoins worth like $10,000 to another person, maybe sitting in Antarctica, and I can do it in a fraction of a second and it will cost me less than a cent. So the technology to do these kind of transactions and for the global flow of money to be just completely free is already here. Fiat is already pretty outdated. You look around and you see that it's pretty much a cashless society. So the next step, in my opinion, is we have a cashless society where the units of exchange are decentralized. So let me talk about these stablecoins for a bit. So this one over here, the green stablecoin, it's called Tether, USDT. USDT and USDC are centralized stablecoins in that they're issued by an official entity. So for example, USDC is controlled by a company called Circle. So if I'm a big company and let's say I want $100 of USDC on the blockchain, so I can send Circle $100 US and they will then send 100 USDC to my wallet. And so in theory, every USDC is always redeemable for the equivalent amount in fiat US dollars. So that's centralized stablecoins. So centralized stablecoins still have the problems of being controlled by one entity. There is still a middleman, right? So that's where DAI comes in. So DAI was the first decentralized stablecoin because DAI is partially backed. DAI is a partially backed algorithmic stablecoin, meaning that the value, the peg to the US dollar, is not controlled by being 100% backed, like USDC, for example. It's controlled by algorithms and fractional reserves. So, for example, DAI is backed by Bitcoin, and it's backed by USDC, and it's backed by several other assets. And the value of DAI is kind of modulated and controlled by algorithms on the blockchain 24/7 autonomously. The kind of next step in decentralized stablecoins was this one over here. It's got quite a funny name, Magic Internet Money. So what Magic Internet Money did is that it sought to create a stablecoin completely isolated from the global financial system. So because USDC is still controlled by a centralized entity, it's still backed by US dollars. And DAI is partially backed by USDC. So Magic Internet Money sought to create a stablecoin that's only backed by native digital assets. So for example, MIM is backed by Ethereum. It's even backed by Shiba Inu. It's backed by Doge. It's backed by Avalanche. It's backed by a basket of digital assets. So this is a true decentralized stablecoin because it has no ties to the present monetary financial system. Another decentralized stablecoin is called Frax. Frax is an algorithmic stablecoin. So just to contrast this, in real life, we have, in the traditional financial system, we have US dollars backed by a central entity. And now in crypto, we have these stablecoins taking over, which really are backed by just other digital assets. So this is a huge threat to banks. It's a huge threat to even countries. Several days ago, Hillary Clinton even came out and said that crypto has the potential to destabilize entire sovereign entities, entire countries. And that's because now we have a medium of exchange, a currency, a dollar, which is not linked to the financial system. It's backed by digital assets, and it can be transacted in a split second by anybody around the world. So this is one of the points of my thesis, which is that decentralized stablecoins will take over fiat as the medium of exchange. And of course, that's very detrimental for banks and governments. So another thing that DeFi has done for people is that it's democratized market making. So market making has been this kind of very elusive, mysterious practice, done by firms like Citadel, where market makers basically control the spread and the liquidity of markets. Traditionally, you need to be an institution, you need to be accredited, you need to have a whole host of licenses just to be a market maker. But Uniswap came along, Curve, SushiSwap, all these DeFi protocols came along, and they established this innovation called the AMM, Automated Market Maker. And that's now made it possible for literally anybody in the world to be a market maker in just a few clicks. So because of this, if you really look at it from a conceptual standpoint, firms like Citadel and BlackRock, they've lost their edge because now anybody can be a market maker. I can mint a tokenized stock, I can mint an Apple stock on the blockchain, and now I can be a market maker for Apple stock. So I can mint Ethereum, so I can buy Ethereum, and I can be a market maker for Ethereum and USDT in just a few clicks. So what market making allows the average person to do is basically provide their liquidity for a certain market and then earn profit on the trades that occur. So you'll see over here, for a pool where I'm market making between Ethereum and USDT on SushiSwap, the annualized APR is almost 35%. 35% is already outperforming most hedge funds in the world. And these are hedge funds which have ultra sophisticated, high frequency trading strategies and arbitrage and everything. And anybody can outperform them in just a few clicks on SushiSwap. So that I think is really, really important. The democratization of, these elusive and elite financial services like market making. Now, anybody can be a market maker. Another place, another sector where I think DeFi will definitely take over is lending and yield. So in DeFi, this is a very important attribute of DeFi, is that sometimes you can get paid to borrow, right? So let's start off with a very concrete example. So if you go to HSBC and you deposit $100, right? You just deposit that in your savings account. What the bank is now doing behind the scenes is that they're taking your $100, lending it out to other people, and then paying you a fraction of the interest they generate on the lending they do with your money. What DeFi does is that it takes out the middleman, it takes out the bank in the middle, and now you are responsible for your own kind of everything about your money. All the responsibility and all the power belongs to you. You can be a lender in a money market, and almost 100% of the interest generated by your money goes to you. So this is pretty revolutionary because that just hasn't been possible before. You've had so many financial intermediaries to the point where the lending rate, the savings rate for just having money in your bank account is less than 0.1%, right? That's because the middlemen or the banks are eating all of the interest. So you go on a lending market, a DeFi lending market, and you can deposit USDT, which is just US dollars. It's a stable coin backed by US dollars. So just depositing that will get you more than 9% on your money, right? And in addition to that, the system, the protocol also pays you, an incentive in tokens for, kind of thank you for providing your liquidity, and an incentive to attract more people to kind of provide their liquidity. Because the more liquidity in a system, the better it is for the system. So DeFi incentivizes liquidity providers really, really heavily. So that, in conjunction with eliminating middlemen, means that if you replace having a bank account with just putting your money in a lending protocol like Aave or like Trader Joe on Avalanche, for example, you can just right off the bat start earning like 10, 15% on your money as a savings rate, which is actually what you should be earning at the bank. But now there's no middleman and you get all the interest. So I want to highlight a few protocols here, which are quite prominent in the lending and yield space. So the first one is convex finance. You can read about how it all works behind the scenes afterwards, but I just want to highlight the kind of interest rate here you get on depositing pure US dollars. So in the bank, you deposit US dollars, you get less than 1%. On Convex, if you go and deposit US dollars, you get more than 6%. Abracadabra is the name of the protocol that created magic internet money. And by the way, I kind of love the kind of memetics and the kind of names behind all the projects in the space. It's just super interesting because obviously DeFi is revolutionary and disruptive in terms of what it actually does, but it's also disrupting the kind of norms that all these institutions used to have in place, because now you see C-suite executives in like boardrooms discussing things like magic internet money and Trader Joe and Abracadabra, and all these institutions actually are really desperate to get in on DeFi and get in on the crypto space. So that's a huge opportunity, which I will talk about in a second. But yeah, so a centralized stablecoin, you can get like more than 6%, and a decentralized stablecoin like MIM, you can get more than 30%, which is amazing, right? Because you're getting all the power that is rightfully yours. It should be. You're getting it back. You're eliminating the middleman. You're getting all the interest back to you. So I want to highlight Trader Joe as well. Trader Joe is a decentralized exchange. So, I mean, for example, you have centralized exchanges like Binance or FTX. Then you also have decentralized exchanges where these are exchanges that run on the blockchain. Again, not controlled by one entity. They're decentralized, permissionless, and on 24/7. So if you're a market maker on a decentralized exchange for a stablecoin pair, meaning that if a person wants to swap their USDT for DAI, for example, I have 100 USDT, I want to swap it for 100 DAI, right? So I need the help of market makers who provide the liquidity for me to do that. And the market maker captures a percentage of the trade as a kind of trading fee. So if you're a market maker for USDT and DAI on Trader Joe, you're earning 24%. Just by market making, your savings or your spare cash. So I think lending and yield are quite revolutionary in DeFi. And they will surely disrupt the kind of traditional lending and yield instruments that we have today. So now I want to shift the focus to a couple of very unique and disruptive DeFi protocols. So this is the kind of stuff that, I've seen, and I have to look twice because it's the kind of thing that you don't even know is possible until you see it. I think a really good example of that is self-paying loans. So there's a protocol called Alchemix where you can deposit, $100 and you can borrow $50. And the loan, now you're in a loan, your debt is equal to $50. That's going to pay itself off. It's really interesting how that works because DeFi is composable, as in all these different protocols can kind of build on top of each other like Lego blocks. So Alchemix is a great example of that because what Alchemix is doing, it's taking your initial deposit, generating yield on that deposit, and then giving you a stable coin in the meantime, which is representative of your debt. So let's say I have $1,000, but I want to cash out 500, but I still want to keep my capital. So what I can do, I can deposit my money in Alchemix, withdraw $500, and I come back in a year or 2 years, and that $500 of debt has been paid off automatically by the protocol, and I can now withdraw all my money, and I end up with $1,500. So self-paying loans sounds really esoteric, but actually you do see an example of this in the traditional financial system, and that is with mortgages. So when you buy a house with a mortgage, you're taking on a loan in exchange for an asset. Now you can get a tenant for that house, and the rent that the tenant pays is going to pay off the loan you took on the house. So a lot of people do actually conceptually treat, kind of real estate investments and mortgages as kind of self-paying loans, because the house pays itself off using the yield that it generates, which is in concept what Alchemix is doing with your money. It's bringing this kind of idea of self-paying loans to every person on the planet, regardless of the amount of money or anything like that. So I think Alchemix is quite interesting. You should read up on that. Then we have an especially disruptive sector of DeFi, which is tokenized stocks. So tokenized stocks means that anybody can go on the Mirror protocol and they can they can deposit collateral, and against that collateral, they can mint any stock. They can mint an Apple stock, they can mint, Amazon, Facebook, Netflix stock. And then those stocks can be transacted on the blockchain outside the financial system. So that means that even for investing in, sovereign equity, that can be done permissionlessly. That's now become decentralized. Anyone with an internet connection can now invest in US-based stocks. Another market which is especially interesting, and which is a narrative which I think is going to start being more and more prominent in DeFi, is decentralized derivatives. So the derivative space is actually in the TradFi system worth over $1 quadrillion. So that's 15 zeros. In DeFi, the derivative space is worth less than like a couple billion. So there's a huge potential for growth in this space. And what decentralized derivatives applications allow people to do is, get things like leverage, margin loans, options, calls, puts, anything in a way that's removed from the financial system. Another disruptive product, I think, is Ribbon Finance. So what Ribbon does, so traditionally, if you're a high net worth client, you would go to your investment bank and they would offer you a structured product. So Ribbon offers structured products to every person with an internet connection. So now you can buy a token which is representative of a structured product that, for example, generates yield by selling calls against Ethereum. So Ribbon is democratizing structured products, which I think is great. Now, on the more kind of gray area side, you have tools like Tornado Cash, which are privacy tools. Because everything on the blockchain is open, everything is transparent, every transaction by nature is traceable. What Tornado Cash does is that it breaks the on-chain links between transactions. So normally I can tell exactly where, an Ethereum token has been. I can trace which wallet it's been to. But with Tornado Cash, I can kind of break those links. And now you can have money that's not only outside the financial system, but it's also untraceable in DeFi and in, the blockchain. So you're already seeing a lot of governments ban Tornado Cash, for example, and I think that's a real challenge for regulators, for AML and CTF regulators. Tools like Tornado Cash and others are quite a big challenge. Then you also have another sector, which is called reserve assets, right? So I want you to look at the APY on this, the interest you earn, which is, almost 7,400% in a year. How is that possible, right? So what reserve assets do is that, similar to stablecoins, they create a new type of asset which is backed by, various types of collateral. So Olympus DAO is a really good example because it's created a non-pegged asset, meaning unlike a stablecoin, it's not pegged one-to-one, but it's created a non-pegged asset which in reserves has like a huge basket of other digital assets. And what all of this is kind of doing is it's basically just trying to democratize the financial system, right? Democratizing the kind of functions of a central bank, of the Federal Reserve. And yeah, so I think DeFi is really, really disruptive to TradFi. And we're going to see a future where, similar to how automation disrupted factory workers, DeFi and automated, algorithmic, and autonomous products are going to completely disrupt the banking space. So for this section, I kind of want to talk about how, if you're young and you want to kind of get into crypto, but you're kind of unsure how to exactly do that. So in my opinion, the most important thing for building a career in crypto is just being 100% involved in the space, right? So not only do you need to understand everything, so you need to understand everything, and I mean everything. You need to know what all of this means. You need to have a deep knowledge and really understand and be able to use everything. You need to be able to use every single DeFi product that is out there. You need to have that kind of skill. And the way you do that is you do that by just researching and investing and trial and error, and just kind of reading every piece of information you get your hands on, going down, rabbit holes, seeing where they lead you. And because crypto is so new and I mean, it's got a really, really flat structure. So you can go on Twitter and you can literally message the founder of Uniswap and ask for a job, ask for an internship. You can message the founder of Alchemix or DYDX, and it's really flat, right? So the opportunities are really just everywhere. So in particular, there's a huge demand for developers and smart contract engineers. So, I don't think I have to explain how easy it is for anyone to learn any skill on YouTube and, Wikipedia or whatever. But if you have these like Web3 skills, we call them Web3, the Web3 kind of toolkit, which is Solidity, Web3.js, all these different developer packages. You can pretty much just start freelancing for a lot of these DeFi projects, and it's very, very lucrative. So for those of you who are in the kind of computer science space or looking to, build more developer skills, you should look into something called Gitcoin, Gitcoin. So Gitcoin is a kind of job board where decentralized protocols, basically crypto companies, they kind of post bounties for the things they want done. And you can pick a bounty, you can check it out, you can fulfill it, and then you get rewarded, right? You get paid like US dollars or tokens, and it's very, very, very lucrative. Because again, like knowledge and developers in the space with like actual knowledge are really, really lacking. And if you want to work at institutions like FTX or Binance, you really have an advantage because DeFi has been around for like max, like you can stretch it like 2.5 years, right? Not even 3 years. So in contrast to like banking, which has been around for how long has humanity been around? DeFi has not been around for that long. So you have an advantage in understanding everything in the space better than someone who has been in the financial industry for like 10, 20, 25 years. So young people really have a huge advantage in the crypto and DeFi space. Yeah, and I would also recommend kind of doing as many projects as you can. Take on any kind of personal project you find worthy, develop your kind of knowledge of trading, develop your quant skills, your developer skills. And after that, it's just a matter of finding opportunities everywhere, learning about everything, just reaching out to people. Because it's not like it is for, jobs today. Like you go on LinkedIn and you just apply, oh, I want to work at a crypto company. That kind of landscape for jobs and careers, it's not here yet. It's all by just word of mouth and reaching out and finding opportunities yourself. So you have to have a lot of initiative and you have to be really, really proactive. Okay, so this kind of is the kind of investing alpha section, which is if you're kind of looking at this whole DeFi crypto thing and you don't know where to start, where do you start? Or if you're already investing, how do you kind of squeeze your returns to maybe turn that 20% gain into a 200% gain, right? So you got to understand that there are several approaches to investing. You can be a trader, you can just be a holder, and even within those, just holding, you can strategically invest in kind of niche protocols or undervalued things that you find. Or you can just, buy Bitcoin, buy Ethereum, and go to sleep for like 10 years and wake up a millionaire. And within trading, you can be a scalper, you can be an intraday trader, you can be a swing trader. So if you want to start out, I recommend learning about all of these different investing approaches and just trying them all out. Take a small amount of money and just see what works for you, because this is a kind of skill you're trying to build where the outcome is to make money. So you don't want to focus on your weaknesses. You find out exactly what you're good at and just triple down on that, right? Because if you try to stop and, okay, for example, let's say I'm a great, futures trader. I'm great trading on margin and leverage, and I'm great at that. But I'm not a very good investor. Like if I see projects, I can't really tell what's undervalued, what's good, what isn't. But I'm really good at spotting like swing trades and intraday moves. So I'm gonna make money doing one thing, right? And if it's likely the expected value is for me to lose money to the other thing. It makes sense for me to triple down on the thing that's gonna be good for my returns. So that's just an example, right? Find out what your investing style is by experimenting, by trying everything, and then stick to it. So like I said, like this kind of landscape is so sprawling, right? Like there's a lot. So what you can do is literally open up CoinGecko or CoinMarketCap and just go down the list of every category: DeFi, NFTs, derivatives, like all the top coins, and just click on them, read them, go to the website, use the app. And really the best way to kind of start investing and learning about this stuff is just to use everything. Okay, so now let's say that you're kind of already investing in the space. How do you kind of get those extra returns, right? So what's great for that actually is yield farming. Like I said, you can go be a market maker on a platform like SushiSwap, and this is a kind of conservative pool. 35% to do market making is really not much in crypto. There are pools where you get rewarded like 500% or even more than 1,000% for being a market maker, just off like the trading fees and the volume and the token incentives that you get. So a really good piece of alpha is to go to SushiSwap on, let's say, the Ethereum network and sort the pools by their APR and just go to the highest APR pool. Like, read what the project does, see if it's a good fit. And if you think this is going to perform well for like 1 or 2 weeks, just put your capital, put your liquidity in that pool and earn that, 200, 500% APR for that period of time, and then pull it out. Because these APRs are often inflationary, meaning that they reward you in the asset that you invest, meaning that over a long period of time, it's inevitably going to sell off. So you need to identify these yield opportunities over like a period of like a week or 2 weeks, and then just heavily allocate to them. Another way to get superior returns is to kind of explore this reserve asset space. So as you see, the APY over here is 7,400%. For these kinds of protocols, that's really, really low. So because for this branch of DeFi, you can see APYs up to like 500,000%. So I mean, you gotta really learn about that, right? Like, it's a risk curve. Like, the more yield there is, usually the more risk there is. Like I said before, a sector that I think is going to be really prominent in the near future is decentralized derivatives, because we've seen like a lot of the markets shift from TradFi into DeFi, like lending, loans and stocks, etc. But we haven't really seen like a full stack derivative solution do that yet. And so I think that's a good place to look if you're looking for kind of the next narrative. And in terms of yield farming and so in terms of yield farming and kind of getting superior returns, I really recommend that you just start off by taking your savings out the bank. When you have a lending protocol which is paying you 10% just to deposit your money, it really seems as if there's no excuse to leave your money in the bank with like less than 1% being paid to you. So I think that just about covers it. So the alpha really is in these decentralized stablecoins, market making, lending and borrowing, and derivatives protocols. So I hope you've enjoyed that. I see we have a little bit of time for questions. So guys, feel free to jump in.
Yeah, sure. Thank you, Aashman. Sure, like you have shared a lot of info with us, and I believe every one of us is also get inspired to talk about from the basic of DeFi backgrounds deep down to introducing us with different protocols which maybe some of us maybe not even heard about it before. So maybe if you guys have any questions, we could raise out, and Aashman could now answer for you guys.
Hello, Aashman. Can I ask a question? Yeah, I'm a traditional finance guy, and one of the most important rules I've learned from my experience is that high risk, high return. So you're telling me now that those stable coins, some of them are earning 30–40%, and some of them even giving 7,000%. So what's the risk we're taking?
Yeah. So the risk curve for crypto is quite different from what it is in traditional finance. So in crypto, a yield of like 10% on your stable coins is essentially the least risky thing you can do. All those like 7,000, 500,000% yields, they're all more esoteric. And I mean, those are on the far end of the risk curve. Like they require a lot more like a DD, and you got to really understand how it all works. But just the most simple thing that I think everybody should start doing is just is really exploring these protocols, which like lending markets like Aave or, you know, Trader Joe, where you kind of, all you're doing is taking out the intermediary, which was before in banking responsible for giving you an interest rate on your savings. In DeFi, all you're doing is eliminating that intermediary. And everything is backed by smart contracts. Everything's autonomous. If you pick like a blue chip platform, everything's secure. So I think in my opinion, the kind of 10 to 12% interest rate, that's the kind of safe end of the DeFi spectrum. And I think that's very viable for most people and institutions to even explore.
Actually, how safe are those platforms? Because you said that it's based on smart contract. Are you sure that there's no backdoor? And even we frequently hear news about DeFi platform being hacked. So is that possible that there's a certain risk associated with that?
Yeah, so like I said, the smart contract space is, it's huge, it's thriving. And like a 1 week of smart contract, like cybersecurity auditing time at a company is worth like hundreds of thousands of dollars, right? People really have to pay a lot of money to make sure their protocols are secure, which is why I think it's really wise to stick to the kind of blue chip protocols when you're looking for yield. Uniswap, Curve, Aave, SushiSwap, Trader Joe. So as long as you're sticking to the blue chip protocols, and these, by the way, get audited by firms like Chainalysis and PwC, and you know, so the auditing and security infrastructure for the blue chips is really, really robust. So, in my opinion, I don't think there's much of a risk over there.
Okay, thank you.
Yeah, so there's a Q&A questions. Maybe I could read it out. Like for synthetic stocks, DeFi derivatives, is there any conflicts with current regulators, given those the areas the SEC, CFTC are regulating?
Yeah, so there's a huge conflict, right? There's a huge conflict because traditional institutions don't want kind of DeFi to democratize everything, because again, they're valid concerns. AML, CTF, like that's all really, really valid. So tokenized stocks usually fall on the wrong end of the spectrum. We've seen, you know, FTX and Binance delist tokenized stocks for like Tesla and Coinbase off their exchanges because the US regulators had something to say about it. But the thing about DeFi is that, you know, it's independent of any central intermediary or authority. So even if like the SFC doesn't like, you know, Mirror Protocol, for example, which is a tokenized stock platform, there's really nothing anybody in the world can do about it because it's on the blockchain, it's decentralized, it's autonomous, and no one really has control over it. So I mean, there's not much they can do about it. I think we'll see more regulations form kind of in acceptance, but yeah, in the meantime, there's not really much they can do about it.
Yep. Okay, so maybe from my side, I have a question about the Olympus DAO, because personally, I also get very interest in the Olympus DAO because it has like 8,000 APY. But the downside is like if the price depreciates, then that the APY cannot keep up. So is it still like you will still advise us to go to this protocol or not?
I can't give any financial advice, but if I was in a similar situation, I think what I would do, I think so. The main downside of Olympus DAO is that, I mean, for most people, it's on the Ethereum blockchain, and gas fees are expensive, and it's usually not profitable to do transactions. And you're right, like an APY of 7,500% isn't enough to protect you if the price drops 50% in like a day, right? So I think in that situation, I would explore forks of Olympus DAO on other blockchains. So on the Avalanche blockchain, you have a fork called Snowbank, you have Wonderland. On Solana, you have a fork of Olympus DAO called Invictus. And so I think these blockchains where it's less expensive to transact, and where these forks are kind of just getting started, like you'd still be early to Invictus, but you wouldn't be early to Olympus, right? So I personally would look for opportunities elsewhere besides Olympus, but in the same kind of category.
I see. Okay, thanks.
Hi, Aashman. I'm Michael. Just wondering if I'm new to the blockchain kind of investment, then how could I get into like a DeFi, and what should I prepare? And my second question is like that there's so many DeFi projects out there. Like, how do you choose like which one is safe, which one is good to like get into, which one is like the best risk-adjusted return one? How do you choose that?
So I think that's a really good question, because there's a lot of asymmetry and inefficiency in the market. It's impossible to know what's good for risk-adjusted returns. But if you're getting started, I think just go to coingecko.com or coinmarketcap.com, and maybe pick like the top 20 crypto assets or market cap. So Bitcoin, Ethereum, Litecoin, Cardano, Solana, and just read about them, see what they do, and then try to use them. And then go to the kind of DeFi section of CoinGecko and see if you group it, if you list it by market cap, you kind of see the blue chips first, right? So you would see Uniswap, you would see Curve, which are kind of the blue chips. And the DeFi education kind of community is really great on YouTube. There are a lot of really cool resources, but I think, like, you can't be a good swimmer by reading about swimming, right? You just gotta jump in the water. So you just gotta try all this stuff out, right? You just gotta use every protocol you can get your hands on.
Got it, thanks.
Hi, this is Ivan. Thank you very much for the presentation. I've noticed that you've mentioned the stage of the DeFi world is still at the early stage, so that the yield is quite high at this moment. May I know when will this kind of low-hanging fruit be over? Will it be over in 3 to 5 years? So say after three years or 5 years, the high yield projects will be all gone, or you think this would be a continuous phenomenon, or like the yield would continue to be high in future?
So yeah, that's a great question, because right now the total kind of TVL of DeFi is $265 billion, which in comparison to like a single fund like BlackRock, like trillions of dollars in AUM, that's nothing. So yeah, I think the yields will dilute considerably, but I think they'll dilute on the lower end of the risk curve. So for really like non-risky kind of strategies, right now you can get like 10 to 20% by not taking on a lot of risk yield-wise. So I think that will really dilute, because most of the capital will come in from institutions who aren't looking for really high APY, like really unsafe stuff. So the capital will mostly go to stuff like Aave or Curve. So the yields for the safe stuff will dilute, but I think there's always going to be opportunity to get those like 30, 40, 50% or even higher yields. I mean, as long as you're willing to take more risk. But yeah, I think the low-hanging fruit, like the not so risky, like 20% yield on USD, that's going to be gone within like 5 years, I think. So.
Okay, thank you. And another question is that for your own hedge fund, how do you protect your downside? Do you hedge by like buying puts on some derivatives or any kind of hedging tools do you use?
So the cool thing about the strategy that I run is that I don't really trade like digital assets which have price actions. I just do stablecoins, or I just do market neutral stuff. So mainly I just do stablecoins. I just generate yield on stablecoins by market making between different stablecoins, or like lending different stablecoins. So to me, it doesn't matter what the price of Bitcoin does. It doesn't matter what the price of Ethereum does. Like my fund will still generate like a consistent yield because it's lending and market making. So I don't really have to hedge. Yeah.
Okay, I understand. But this is based on the assumption that the stablecoin will be stable forever, right? But how about if it drops suddenly by 10% out of no reasons? So is there any like defense mechanism of your management?
Yeah, so that's why. So centralized stablecoins are the safest, right? USDC is in real life backed by $1. One USDC equals $1. So even if the price drops, you can still redeem one USDC for a US dollar in the real world. So yeah, most of our portfolio is allocated to these kind of centralized stablecoins because those are the safest. Those pretty much can't drop like a considerable percentage and like not go back up because they are completely backed. Those like fractional stablecoins or algorithmic stablecoins make up a smaller part of the portfolio because yeah, they're farther along the risk curve. They're more risky, but they give higher returns. So what affects the price of stablecoins is, I mean, it's counterparty risk, it's collateralization ratios. Like, for example, if you have a stablecoin for which the collateral is Bitcoin and Bitcoin drops 50%, then, you know, the price of the stablecoin also goes down. So, I mean, in turbulent market conditions, all we do is we shift our kind of riskier stablecoin. We shift that allocation over to the kind of less risky, like USDC, for example.
That's very clear. Thank you.
Okay, so is there any more questions? Okay, cool. So I would like. Oh, is someone want to talk? Okay, so
there's one in the chat. I think that's important to answer. So it says, given the high APY of yield farming, is it worth the effort of staking any coin when given the lower risk? What I think this kind of means is that considering that there's risk, like the price could drop, is it still worth kind of staking? I think yes. If you're staking something like Ethereum, if you're being a market maker for Ethereum and USDT and getting 40% of that is great because those are like traditionally not so risky assets. But if you go along high APY stuff, you really have to be careful. You pretty much got to watch your farm like pretty much every day, like check on it every couple of hours. So in my personal experience, yeah, it's definitely been really, really worth it sometimes, but sometimes it's been really, really, really not worth it. I've regretted it. So, you know, it's really case by case. You got to assess your own appetite for risk.
Okay, so I'll wrap up in a Chinese way. Okay, 咁好多謝 Aashman 你今日嘅分享先啦，係啦，咁我哋真係學咗好多關於 DeFi 嘅嘢啦。咁同傳統金融相比咧，呢個方法係會可能最能交易嘅時候比較高效啦、靈活、安全同埋自動化嘅。咁 DeFi 咧，其實佢解決咗好多傳統金融嘅問題啦，都令到我哋睇到好多更加多金融科技發展嘅機會。咁即係可能而家使用者咧，佢未習慣呢個新嘅傳統淨係習慣咗傳統金融嘅呢個運作方法啦，仲未接受到 DeFi。咁目前咧，我哋見到 DeFi 咧嘅基礎建設咧，仲係未話好成熟嘅。但係咧，雖然 DeFi 未係主流啦，但係呢個嘅進步咧係不斷咁樣會去進程，係唔會停止嘅。咁隨住 DeFi 嘅技術同埋平台繼續完善咧，我哋未來咧好快會見到越嚟越多喺呢個應用喺個平台方面啦，同埋加密貨幣嘅應用，好值得我哋咁期待。咁再次多謝 Aashman 今日嘅分享啦，咁亦都希望大家當條片去 upload 咗喺 YouTube 嘅時候咧，都記得 like 翻我哋香港數碼資產學會 Hong Kong Digitalassethk Society 嘅呢個 YouTube link。咁我哋好期待喺下次嘅講座裏面再見到大家。Thank you。 Okay, I think it's end. The record should be end too.
Oh, great.